Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz as we get this trading week underway. And let's begin with what's happened over the weekend. Now, the US military has seized an Iranian cargo ship that tried to run its blockade in the Strait of Hormuz, while Iran said it would not participate in a second round of peace talks. This after Iran lifted and then reimposed its own blockade of the strait. Now, the reopening of that key shipping route on Friday sent oil prices tumbling and share markets soaring on the hopes of US-Iran peace deal. On Wall Street, the S&P 500 and Nasdaq set their third straight record close, while the small-cap Russell 2000 also posted a record closing high. For the week, the S&P 500 gained 4.5%, the Nasdaq 6.8%, and the Dow climbed more than 3%. Well, oil stocks fell heavily, led by ExxonMobil and Chevron. The biggest gainers were consumer discretionary stocks, with cruise operators Royal Caribbean and Carnival leading the advances, United Airlines leading the industrials higher. Netflix was the biggest drag on the S&P 500 after the streaming giant forecast current quarter earnings below expectations and announced the departure of co-founder Reed Hastings. Investors this week will look at a raft of corporate results, among them Tesla, the first of the Mag 7 to post results. Others include aircraft maker Boeing, semiconductor company Intel, and consumer products maker Procter & Gamble. And tech heavyweights such as Microsoft, Alphabet, and Meta report next week. Well, Iran has blamed its decision again to close the Strait of Hormuz on the US blockade of its ports, calling it a violation of the ceasefire, and said its navy is ready to inflict new bitter defeats on its enemies. President Trump has called the move blackmail, despite stating he's having a very good conversation with the Iranian leadership, and said he's sending negotiators to Pakistan for talks with Iran tonight. However, Iran has denied that it will participate in a second round of talks. Well, here at home, Finance Minister Katie Gallagher has told the ABC Radio that next month's budget will focus on protecting businesses and households from the economic impacts of the war in the Middle East, particularly around the price of fuel and its distribution. And in regards to expected changes to the capital gains tax, she said the government had not changed its policies, but that announcements around a focus on intergenerational equity would be made in the budget. Well, US Treasury yields fell on Friday as optimism grew that the Iran war may be nearing an end. The US 2-year fell to 3.71%, the 10-year was at 4.25%. Australian 3-year government bond yields, they fell to 4.59%. The 10-year was at 4.95%. Markets pricing in a 75% chance the RBA cash rate will be hiked by 25 basis points at the next meeting on May 5th, and a 100% chance by June. The US dollar was a little changed. The Aussie is currently trading at 71.3 US cents. Now, oil prices fell around 9% on Friday after Iran said passage for all commercial vessels through the Strait of Hormuz was open. And President Trump said Iran had agreed to never close the strait again, but it is now closed again, and that has seen Brent crude retrace its losses, rebounding to over $90 a barrel. And the Trump administration has extended its loosened restrictions on Russian oil. Gold again prior to the renewed closure of the strait. Spot gold currently at around $4,830 an ounce. Copper's up around 0.5%. Iron ore fell to $108 a ton, and Bitcoin currently trading just under $74,000. Well, let's get across what we're seeing on global markets at the moment. Greg Smith is joining us from Generate KiwiSaver in Auckland. Greg, good to catch up with you on this Monday as we get proceedings underway. How have you opened there, given on Friday, markets obviously very buoyant, and then of course we had it all reversed again over the course of the weekend?
Yeah, hi Andrew, how you going? Yeah, so we've had a positive start over here in New Zealand. So the index 50 is up 0.6%, 12,984. We went a little bit against the grain actually last week. We were actually lower. A2 probably playing a bit of a part there, but yeah, look, generally it seems like obviously it's sort of the strait's open, the strait's closed. Yeah, it's an ongoing story, but I think markets are continuing to, I suppose, look through the conflict, pricing a path towards de-escalation. It was clear the risks remain, and we don't know whether we're going to get that, when and where we're going to get that peace deal, but markets are certainly brushing it aside. Pretty incredible, isn't it? So you've got the S&P and the Nasdaq and the Russell 2000 all hitting sort of record highs. S&P up 9.2% month to date. Nasdaq up 13.4%. 3%. So yeah, really just that sort of path to de-escalation that we're looking at, but obviously still plenty to go in the story yet.
So, Greg, do you feel as though the markets are just in that bullish mode, aren't they? That they're looking past the mechanics of what's going on in the Middle East at the moment, betting that this will be resolved either way, that perhaps Trump's going to find an off-ramp somewhere, and therefore they're just willing to keep push higher.
Yeah, that's right. And as you sort of alluded to, yeah, the oil price has been literally all over the shop. And obviously the equity markets haven't matched that volatility. In fact, equity markets are arguably more volatile around Liberation Day last year. So, looking through that, the oil price, if it hangs around these levels, that's going to be very, very relevant over the longer term. But it's just sort of all over the place, isn't it? Interestingly, you can also continue to look at sort of forward dated futures for oil. It's sort of trading down towards sort of $70. So commodities markets also looking through this, and it's a matter of, I suppose, when, not if, that straight gets moving again. We'll have to see. But I think the other key thing, Andrew, is that the earnings season, which have been helpful to the recent sort of lift back towards above record highs, has been supportive. So you had the banks last week; they're clearly benefiting from elevated market volatility, and obviously the tech sector has been a big, pretty much over the past sort of 15, 18 months plus, a supporter of the market buoyancy. A little bit of a rocky start this year, but Taiwan Semiconductor, hard to go past that last week. 58% profit increase, lots of demand for AI chips. And I was also looking at something earlier about tech insider buying. Shows you sort of optimism within is really strong as well. That's hit a 15-year high. So certainly going to be a lot to watch this week and beyond, with all those sort of tech earnings coming out as well.
Yeah, indeed. Well, we do get, as I mentioned there, get Tesla this week. Next week, we're going to get more of the Mag 7, Microsoft, Meta, and Alphabet among them. Greg, you mentioned oil prices. Obviously, this all hinges on that flow through the Strait of Hormuz, with estimations that the real impact is yet to hit. And of course, we are seeing the effect of high oil prices on inflation. How is that manifesting itself in New Zealand?
Yeah, certainly paying more for our fuel over here. Although I did notice over the weekend that prices have dropped back from recent peaks, so maybe a little bit of early optimism there. We'll see if that's well placed or not. But so our selected price indices data has actually come out, Andrew, which is sort of shows a large part of the CPI, which is actually due out tomorrow. So petrol in March up 19%. Diesel, not so good if you're driving a truck, and this is obviously very relevant to businesses. Diesel prices up 40% last month in New Zealand. So they're the largest monthly increases on record. And this is also having an effect as well in terms of not only putting extra costs on businesses, of course, but also crowding out consumer expenditures. So we also got a print on it, card spending, and that was up over 1% for the month, but mainly due to people paying more for fuel. They're actually spending less on hospitality, less on apparel, and so on. So it's going to be very relevant if this persists. But of course, that's the big question. Are we going to see oil prices head back down? And then do we see sort of petrol and fuel go with it?
And Greg, of course, diesel, a huge component for the ag sector, which is a very large part of the New Zealand economy. So what are we likely to see there in the effects?
Yeah, well, that's a good point. And I suppose it's a bit of a double-edged sword because our currency has been very weak. And yet for your viewers in Australia, great time to come over here. We've just gone below 82 cents against the Australian dollar. So I think that's a record 13-year low. So plenty bang for your buck over here. But that's also, I suppose, means that stuff we import, which we're an importer of oil and fuel, that makes that more expensive. On the other side, it is a lift for our exporters, of which as you point out, the ag sector is a big component. So just in the last hour or two, we've had trade data come out as well, which sort of, I suppose, highlights that good imports in March 26 compared to a year ago. They were up by 10%, 7.2 billion. But on the other side, our good exports have lifted as well, 542 mil up to 7.9 billion. So that leaves us with a trade surplus of around about 700 mil for the month. So yeah, a bit of a double-edged sword. And thank goodness our export sector has been doing well, particularly dairy, but also beef prices have been lifting as well. But that's been a key support of our somewhat fragile economic recovery.
And Greg, any other anything on the corporate calendar this week you're at?
Yeah, so it's a bit light in terms of locally. We've got Investor Day for EBOS, I think, and we've got a AGM for Somerset. There's a bit of macro data out, as I mentioned. We've got our inflation quarterly out. We don't get monthly figures, unlike Australia, but I think we're moving towards that. But inflation's expected to ease, would you believe, from 3.1% to 2.9%. But obviously, stripping out petrol, it tells a different story to including it. But yeah, I think it's going to be interesting, obviously, on the global front. So those US retail sales, we've got some inflation prints out in Japan, UK. But you're going to be super interesting with those earnings. You mentioned Intel, we've got you mentioned Tesla, sorry, we've got IBM, we've got Intel. But I guess all eyes on the straight, and that's going to probably be what's going to drive sort of market moves one way or another.
Greg, enjoy the week. Thanks so much for joining us in Generate.
My pleasure. Have a great day.
Okay, so let's then focus on where we're likely to open. Now, let's bring up S&P ASX futures there. And look, that sort of belies the reality of we're seeing at the moment. This was when they closed on Friday, and that's as we were getting that news that the Strait was reopened. Now, of course, it's closed again, so expectations perhaps that we will begin lower. Nonetheless, we just heard from Greg Smith there out of New Zealand. They have opened in the green. So we'll get right across that in just a couple of minutes with the open. Stay with us.